Could the Yijing predict stock market trends? It is not yet necessary to start reducing rates. The US Federal Reserve's implementation of easing policies has not been expected or evaluated by us among the videos on this channel since last year. The reason for this is that the hexagrams in the Yijing, or Book of Changes, indicate that the process of cutting rates is not yet initiated. Hello everyone! Welcome to the channel devoted to the pursuit of happiness. In the labyrinth of international finance, currency values are not just numbers. They are powerful instruments of economic warfare. Recently, the Japanese yen has been tossed about in the stormy seas of currency fluctuation, a scenario that starkly questions Japan's sovereignty in financial matters. When the yen plunged to 106 against the dollar, the Bank of Japan was cornered into a drastic response, selling vast amounts of US dollars to buy back yen. This drastic measure drove the yen's value to an alarming rate of 152 to the dollar, a move that could hardly be pleasing to the United States. But are these actions truly of Japan's own volition, or are they a coerced strategy in the broader context of global power dynamics? This video delves deep into the current currency wars in Asia, with a particular focus on Japan's precarious position of seeming economic subservience and the broader implications for regional stability. Can ancient wisdom help in predicting economic downturns? Our channel. The video titled "A Financial Storm is About to Happen" discusses Japan's alarming national debt to GDP ratio, which stands at 257%, emphasizing the precarious economic situation the country faces in 2023. This video draws parallels between this economic indicator and ancient Chinese wisdom from the Yi Jing, particularly the concept of being caught between two difficult choices, symbolized by jumping out of the frying pan into the fire. This metaphor is used to describe Japan's economic decisions that often lead to worsening conditions rather than solutions. Despite the dire financial circumstances in 2024, the Japanese public remains remarkably calm, a demeanor likened to the tranquility of a Zen garden. This video will explore the resilience and creativity of Japanese citizens in coping with economic hardship through innovative business ventures. The Japanese yen has seen a significant drop in value, reaching a low of 106 against the dollar before a sharp correction was necessitated. Several factors have contributed to this situation, including Japan's vast monetary easing policies, shifts in global investment flows, and speculative trading. This rapid decline has set off alarms within Japan's economic circles and raised questions about the country's monetary policy effectiveness. In response to the yen's depreciation, the Bank of Japan undertook aggressive measures, primarily involving the large-scale purchase of yen and selling of US dollars. This intervention was aimed at stabilizing and then increasing the yen's value, a move that temporarily succeeded as the yen appreciated to 152 against the dollar. However, these actions have had mixed effects on Japan's economy, stirring inflation fears and unsettling investors. Japan's aggressive financial maneuvers in the currency market have sparked debates about its sovereignty over its own economic policies. Critics argue that Japan's actions are heavily influenced by external pressures, particularly from the United States, which has long-standing stakes in maintaining a stable and predictable Asian financial environment. This situation has led to questions about whether Japan can still claim to be financially independent. While Japan struggles with its currency woes, neighboring China and Vietnam have deployed different strategies. China maintains a tight grip on the yuan, ensuring slow and controlled adjustments, whereas Vietnam faces its own challenges with the dong. This part contrasts these approaches with Japan's, highlighting the diverse tactics used by Asian nations in currency management. The fluctuations in the yen do not exist in a vacuum. They have ripple effects across the entire Asian economy. The yen's fluctuations significantly influence the broader Asian economy. These currency variations in Japan can lead to shifts in trade balances, investment flows, and overall economic growth within the region. Fluctuations in the yen affect Japan's export competitiveness. A weaker yen makes Japanese goods cheaper and more attractive on the international market, potentially improving Japan's trade balance. However, for other Asian countries that compete in similar markets, this might result in adverse effects, potentially worsening their trade balances. A volatile yen can impact foreign investment in Japan and the broader Asian region. Investors might see a depreciating yen as a sign of economic weakness or as an opportunity for cheaper investments. This variability can lead to increased foreign direct investment in Japan, but might also cause capital to flow out of countries where investors perceive greater financial stability or returns. The strength of the yen influences domestic economic conditions in Japan and, by extension, the region. A strong yen can dampen Japan's economic growth due to decreased export competitiveness, while a weaker yen might stimulate growth through increased exports. The ripple effects can influence regional economies, particularly those closely tied to Japan, through trade or investment. Overall, the fluctuations of the yen are a pivotal factor in the economic dynamics of Asia, impacting various economic parameters from trade to investment and overall growth patterns. The global financial markets are closely watching Japan's economic strategies and the Bank of Japan's interventions. The actions taken by Japan have garnered significant attention from international investors and analysts, influencing their views and forecasts regarding the future of currency markets. Many investors have reassessed their risk exposure in the Japanese markets, considering the potential for increased volatility or shifts in monetary policy. Analysts are particularly keen on Japan's fiscal and monetary strategies, which could indicate trends for other major currencies. Some investors might adjust their portfolios by increasing or decreasing their holdings in Japanese assets, depending on their interpretation of Japan's economic signals and their anticipated impact on the yen's value. Japan's actions can have a cascading effect on other currencies, especially in the Asian region. For instance, a weaker yen could lead to competitive devaluations or adjustments in other Asian currencies to maintain trade competitiveness. The overall sentiment in the currency markets can also be swayed by Japan's economic maneuvers, affecting global forex trading strategies and international business investments. Japan's recent negotiations with Arab states to conduct oil transactions in yen instead of US dollars is a significant development. Any major policy shift can lead to volatility in oil prices. Changes in production quotas, sanctions, or new alliances can dramatically affect global supply and demand dynamics, impacting prices and thus economies worldwide. Countries heavily reliant on oil exports or imports would see significant shifts in their trade balances. An increase in oil prices could improve the trade surplus of exporting nations, but worsen the deficit for importers, affecting their national economies. Fluctuations in oil prices often translate into changes in inflation rates. Higher oil prices can lead to increased transportation and manufacturing costs, pushing up the price of goods and services globally. Changes in oil policy can redefine geopolitical alliances and tensions. Countries may alter their foreign policies to secure oil supplies or leverage their oil exports for political gain, affecting global diplomatic relations. The economic effects of oil price changes can lead to political unrest or stability in both producing and consuming countries. For producers, high prices typically fund government spending and appease populations, while low prices can lead to budget deficits and social unrest. Any significant shift that affects the US dollar's role in global oil transactions could undermine the petrodollar system. This system, where oil is predominantly traded in US dollars, supports the dollar's global dominance. A move away from the dollar in oil trading could weaken US economic influence and stir international political shifts. Overall, the interplay between economic policies and political outcomes in the realm of global oil politics underscores the critical importance of the petrodollar system in maintaining not only economic stability, but also geopolitical balance. The United States plays a pivotal role in Asia's currency wars, given its significant economic and strategic interests in the region. The influence of the United States on Japan's economic policies, both historically and presently, is significant, especially regarding Japan's currency valuation. The US continues to influence Japan's economic strategies through bilateral trade agreements and negotiations, which often include stipulations about currency practices to ensure that neither country engages in competitive devaluation. Regular dialogues between the US Federal Reserve and the Bank of Japan reflect ongoing collaboration and coordination on monetary policy issues that can affect currency valuations. A stable Japanese yen is crucial for US economic interests, especially considering Japan is a major trading partner. Stability in the yen helps maintain balance in trade relations. Currency valuation can sometimes be used as a tool for achieving broader geopolitical goals, and the US might respond to shifts in the yen's value as part of its wider strategic interests in the Asia-Pacific region. Japan's strategies in handling its currency issues are complex and multifaceted. This part evaluates the strategic decisions made by Japanese policymakers, discussing their potential long-term effects and their success in navigating the turbulent financial waters. This part discusses the economic theories that can help explain the dynamics of the current situation in Japan. From the basics of supply and demand in the currency markets to more intricate theories like the impossible trinity, the trilemma of exchange rate stability, capital mobility, and monetary policy independence, this section provides insights into the economic underpinnings of currency wars. What lies ahead for the Japanese yen and other Asian currencies? This part offers predictions based on current economic indicators and expert analyses. It also considers possible shifts in international economic policies that could arise from ongoing currency wars. This video has traversed the complex landscape of currency wars in Asia, with a focus on Japan's challenging position. Despite its efforts, Japan's financial independence appears compromised, influenced heavily by external pressures and internal economic dilemmas. As the situation evolves, Japan's role in the global economy remains a subject of keen interest and speculation. The conclusion highlights the critical juncture at which Japan finds itself amidst ongoing currency wars, raising questions about its autonomy and strategic economic decisions. The Xiangua, hexagram 31 from the Yi Jing, or Book of Changes, is characterized by the concept of interpersonal sensitivity and decision-making, emphasizing the influence of subtle energies and interactions between people. This hexagram describes situations where mutual attraction and responsiveness lead to effective and harmonious outcomes, highlighting the importance of sensitive and considerate actions in leadership and personal relationships. In the context of currency wars in Asia, particularly those involving Japan and China, similar principles of sensitivity and strategic decision-making can be observed. Currency wars, which involve competitive devaluations to gain economic advantage, require countries to be highly responsive and tactful in their economic policies to navigate the challenges posed and exploit opportunities effectively. Just as Xiangua suggests sensitivity to others' feelings and situations, in currency wars, nations must be sensitive to the economic pulses of both domestic and global markets. For instance, Japan's decision to intervene or not in its currency valuation is influenced by both internal economic conditions and external pressures, such as trade balances, inflation rates, and international diplomatic relations. The Yi Jing advises on the judicious and timely application of influence, akin to the strategic financial decisions that nations like Japan and China must make when engaging in or responding to currency wars. These decisions often involve complex calculations about when to intervene in currency markets and how to respond to the moves of other nations to avoid triggering retaliatory actions that could lead to a race to the bottom. The dynamics highlighted in Xiangua mirror the international relations aspect of currency wars, where the actions of one country can significantly impact the economic well-being of another, necessitating a careful and balanced approach to policy making that considers both domestic objectives and international relationships. In both the Yijing and the arena of currency wars, the consequences of one's actions are significant. Just as Xianghua advocates for actions that lead to mutual benefit and harmony, effective management of currency values should ideally promote economic stability and growth, both domestically and globally, rather than merely serving short-term national interests at the expense of others. We have observed that blending ancient Eastern wisdom with modern financial strategies is not only feasibly, but also possible. The invention is revolutionary, finding a balance between empathy and determination while embracing change. These principles are the reason why this perspective on business management is refreshing. Therefore, let's stay optimistic. These strategies, which are both timeless and current, have the potential to help businesses thrive. The significance of being balanced and having a smart strategy cannot be underestimated. The key is to find the perfect spot and maintain agility, just like a tightrope walker with a safety net. To make it in the future economy, it's necessary to adopt cautious and smart strategies that emphasize balance and adaptability. The current state of the global market is not a straightforward matter. There are both favorable and unfavorable factors, along with both opportunities and risks. The environmental resources of each region on Earth are unique due to their differing latitudes and longitudes. By utilizing artificial intelligence operations, such as neural networks, we can summarize real-time opinions that consider regional characteristics and national economic data. By watching our videos every week, you can keep yourself informed with a wealth of information that will improve the quality of your life in many ways, with minimal time investment. Adaptability and the ability to avoid increasing risks are crucial for survival in these volatile financial environments. Regardless of your experience in investing, it's important to keep track of our video debuts to make better decisions. It's necessary to remember that knowledge is not only a tool to increase your value, but also a source of power. If you have any topics that are of interest, don't hesitate to leave a message. To conclude this episode, I would like to thank all the viewers for their support. If you find today's video helpful, kindly give it a like to make it more accessible in the future when you need to watch it. I am grateful for your attention and would like to express my appreciation. Thank you.